Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, November 13th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll notice right here that the ES continues to trade within the developing trading range here. It is now inside the last 4-day range here. So if I back that up a little bit right here, you actually see that it's a 4-day range here. And this 4-day range also registers down at these lows. That's 32% of average range for a 4-day range. So that means that this thing is building some energy here. It's a very narrow range. The last time we had a compression of this magnitude was here, and we saw that the volatility increased on the breakout that occurred. That was right here. So that was a 4-day range there. The breakout led to a big move down, and then it increased with additional range on the way up. So we're now back down, very, very compressed, and we're building energy for the next move. Again, a breakout of this magnitude could be ahead over the next 4 to 5 days. We could see a range of about 260 points of range, call it over 200 at least, on the next move. And again, say for example price can't get above 3,600, we might be looking at a move into 3,400. That's a pretty quick 200-point move. If we get to 260, then we're looking at a push down into about 3340. So this is a zone here that, again, if it can't get beyond recent highs, we might be looking at a snapback back inside this trading range, and we are already measuring it out to be at least 260 points here based on average range over the last 4 days. So again, keep an eye on this. Above 3580 begins to squeeze, and we could be looking at a test into that 3600. Okay, let's take a look now at the NQ. The Nasdaq 100 here, developing an inside day right now. We're still inside the larger trading range here, this key range. We are trading inside day right now to yesterday's range. One thing we had here is this key range that developed on the impulse move. We got down to the 100% target, and we're now back to the edge. So that range played out very, very nicely. I'm going to go ahead and take that range off now because that was an intraday range. Now what you'll see is, again, narrow 2-day compression right here after the recent squeeze. Typically speaking, this is an energy building phase as well, with a shot to really see a stop run day in the session that follows. So today could continue to be a range bound day where it perhaps comes up to 12K, pulls back. It could perhaps even go below the previous session's low, pull back, and mostly remain within that 200 point range, 11.8 and 12K. Now one thing we've talked about is this 12K level right here, that recent rejections above it have been significant. And so if price comes into 12K and fails to get back above that zone, we could be looking at a drop from 12K into 11K ahead. That could be a plus 1,000 point move. So again, as long as price remains below 12K, short term, the bearish bias remains intact. All right, let's take a look now at crude oil here. Crude oil is currently down 2% right now. We saw a rejection here happen at the upper end of the expanding wedge here. We saw price take out the previous week's high there, and we saw a major rejection day develop here. As a matter of fact, pre-market during this day here, price was still way above 42.50s, and I mentioned watch for signs of rejection just because of the nature of where we are in the chart, the expanding range, previous highs. All of those things are a recipe for profit taking and rejection. The next day we talked about any test between 42 and 42.20 being an opportunity for bears to defend for a shot at reaching 40, 39, and ultimately 38.35. So right now we've had a significant 3-day pullback that is played along perfectly with our rejection trade sequence. What we're looking for now is how does price respond off of 40, because it could certainly bounce for a deep pullback off this level. But if it can't hold it, obviously more downside is likely ahead. So right now, any bounce likely to be dealt with as a lower high for a shot at continuing higher, or lower rather, to 38.35. Okay, let's take a look now at gold futures here. Gold futures is up 0.9%. It developed a narrow 3-day range in the previous session. If we drop this down to 3 days here, you'll notice right there, there's your narrow 3-day range, and it shows right here as well. And that reading, obviously 50% of average range there, and is now likely headed for a breakout in the neighborhood of 88 points in terms of range. So the current move right now through the top of this range at 1880 suggests more upside. What we talked about before was a bounce leading to 1907. So 1907 is still ahead. That's this level right there. And then a shot to see a move into 1980. 1960 to 1980. Right now it looks like we have an expanding type of range that's developing. We just took out the lower portion of this range here. We could be snapping back up toward the 1960s and perhaps as high as 1981.70. So overall this thing remains bullish here as long as price can continue to hold above this blue dot. That blue dot's right at about 1880. And so far strength has been seen, but any failure there again could be significant, because if you try to break out from a 3-day high and fail back inside, it's an indication that you're about to slingshot the opposite way. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Please be sure to like, share, and subscribe. Have a fantastic Friday and a great weekend, and I'll see you in the trading room. Take care.